So they always like, if I come without a dog, they're
First
very
off, could I have a motion to put 4 people on? I think we have Paul, Phil, Linda, and Rachel on the phone. Betty. Okay. I'm sorry, Miss Blair, I just drew a blank. So, Miss Blair's the second. All those in favor?
Aye.
Opposed? Motion carried. Can I have approval for the minutes of March 22nd of 2022?
Are we making a motion?
You gotta be vocal. He doesn't.
Yes, we are, but I'm just having mental motions.
Just want to look at you.
With repeating the names, I don't have the signs in front of me.
I know, I was reading
All of a
for,
sudden, so.
Sharon.
Sharon.
Brandy.
We'll just go with that.
Sharon and Brandy. There you
do
go.
Brandy.
Brandy.
Thank you for.
All those in favor?
Aye.
Opposed? Motion carried.
Aye.
All right, monthly financial report.
Thank you, Chairman.
Hi,
You guys
Julie.
made me a little nervous. I thought I was gonna have a tough crowd today.
No, not, never.
All right, before you have February of the second period, February 2022. Just a reminder, we are now including PCAPs as part of it, just to be consistent with all of our reports. So just a reminder, we have had our audit wrap up, and for general fund, unless there's something I don't know of, we have everything posted. We're like $40,000 less than what we have in here, so we're about 4.9 million, which is still really good. And but if you can remember, we've already put those funds to go to the pay down of the nursing home bonds. That'll happen potentially later in September. So for general fund revenues so far, we should be about 16.7%, but because we get a lot of our property taxes that don't start until June, we will be lower until we get to later in the year. But so far, we are at 14.5% of our revenues, which is better than last year, which we were at 13.2%. And if you remember this year, we also predicted we were going to have more revenue. So we're beating last year by 1.1 million. A lot of that is primarily due to income tax and PPRT tax, which have been, both of them, soaring in revenues. So income tax so far, last year, if you remember, 9 out of the 12 months were the highest. So far, 2 of the first 3 months are the highest in 24 years. So it's just soaring. A lot of that was primarily due to the fear of the Build Back Better being passed. That is not happening, but there was a lot of people who changed their behavior last fall, which have played into the income tax. For PPRT tax, they had a legislative change in Illinois as far as if you had to report quarterly if you were to make more than 500. So that also plays into it. For sales tax, we are just $2,300 more for all the income sales taxes combined. So that's regular sales tax, public safety, supplemental, and local use. We're even to what we were last January, only 2,300. So I would say that's good news that we're trending. And the only fund that I want to bring to your attention that popped up this month is the highway fund. That, again, a couple of other highway funds will also pop on as we go later in the year, and any other funds that might be supported by property taxes that once they come in June, they'll go back off of our list. So those were the highlights I have. I did want to also note that I did update the revenue analysis. I usually do that, say, 3 times a year quarterly based off of when the Illinois Municipal League puts out their revenue estimates. I'll usually kind of simplify it and put it in a report. So that is in there for anyone who wants to go into in-depth run. Great. If you have any questions?
Thank you, Julie. Yes, sure. Jim.
Can you just quickly go over the highway fund? You said it will pop on. You lost me there.
I'm sorry. Okay. I was talking a little slower. So the highway fund is a fund supported by property taxes. So when those property tax receipts aren't coming in until June, the expenses will far surpass the revenues. So then once the property taxes come in June, then that should replenish. And then it should drop off of our list.
I'm following you now. Thank you.
Okay, great.
Okay, any other questions? Steve?
On the PPRT, any read from IML or any other organization about will the PPRT rate continue, or are they saying this was kind of a pull ahead on payments, and kind of give us at least your understanding of maybe the forward-looking plan of it?
I think PPRT has surpassed everyone's expectations as far as what is expected, and I think with the inflation that could impact it going forward. Sorry, I have. I think whatever is going to happen in the economy going forward, we have inflation, we have supply chain, and all those factors can play into it. In all the years that we've had reported, this is far surpassing anything that we've ever seen. I can't tell you if I think this is sustainable and where that's going to evolve.
No.
PPRT usually fluctuates a lot.
But you have reported before that we are not alone. Everybody in the state's
Right.
kind of having
Right.
the same thing.
Right.
So we're not unique in this.
I understood that. I was just looking at, are we just going to see higher peaks and deeper lows, the cycles that may impact us going forward? Again, it's projecting. I know you didn't bring the crystal ball today, so
I didn't.
I know you should have, but next time.
I mean, even just these first 3 payments in this year, we estimated the budget to be a lot higher this year, and we still were way too conservative because it's already over our budget, and we have an estimated very pessimistic another $2 million easy to collect, and really optimistic, I don't know, it could be another $5 million this year, because I sum up the remaining months in the previous years. So the lowest was right around 2 million. It can be 3 million, and it could go up to 5. But so far we're on budget. We're over budget, so that's good. And it'll be a really hard budget, I think, to put together to see, where do we expect that to go. So we'll do more analysis and hopefully have a better report.
Thank you, Julie. Any other questions for Julie? Seeing none, I'll go on to the March 2022 accounts payable. Heather, you handling that?
Yes, sure. So you'll see in your packets the accounts payable review and the checks dispersed in March of 2022. We're continuing to work with individuals in all of the departments across the county on consistent reporting and streamlining, just to make sure that everything's aligned with our budget and consistency amongst departments. And we continue to have a good conversation with them, positive discussions, and I found it's more of an education piece because they just have been doing things the way they've always done them, and just assumed that they were correct. So we're just going to continue working with them as we go along.
Very good. Okay, any questions for Heather? Thank you, Heather. Okay, then we have got 2 different sheets here. Heather, we got anything else? Anything else financial report? Are you going to get that too, Heather? Thank you.
Okay, since I began in January, Shauna and I have been meeting regularly to discuss a lot of different aspects with Headington Oaks. And through these discussions and the recent departure of the finance director, we have decided to make a few adjustments that we think will be more effective and beneficial to the board, specifically in reporting around that. So first, we're adjusting the approach to our accounts receivable and collections. We're going to take a more active approach and try to wrap these up by the end of this fiscal year. We have a really excellent bookkeeper, June, who is on board, and she's really eager to dig in and try to bring these accounts to a resolution. The nursing home, as you know, has been closed for about 2 years, and we really want to kind of just button everything up. So we're going to be working together on a strategic approach to close those out. Secondly, we're working on.
Chair.
Oh,
What is the net AR still?
we have 4.3 million on the books right now.
And do you know what payer sources are responsible for that?
Yes, so that's part of our new approach. Before, it seemed that they were taking more of an individual patient account approach to the receivables, and what we have done is combine them into different payer buckets, and we're going to try to take one bite off the elephant at a time and wrap up, for example, all the hospice accounts. We're going to try and knock those out, and then all of the Medicare accounts. So I can provide a breakout. Well, actually, I think there is a breakout in here by payer source for the 4.2 or 4.3 million that's currently on the books. So we're going to try to take a different approach to it to see if we can resolve these a little faster. Yes.
Was a couple months ago, we agreed to take a write-off on some of the aged past due. Does that show up here in the current 4.2? Does it reflect the write-off? And wasn't there some recovery as part of the write-off? Didn't we get some recovery from the state as a result of that?
I can speak to that. So the write-offs were done, but part of the call that Heather and I had this morning with RSM, who's our actuary and everything, they then have to go through, that was for Medicare, they have to then go through this verification process once the write-offs are done, and they're going through that verification process, and then it goes on the cost report, is my understanding, and then we will be able to recoup those funds. So we're in like step 3 of 4 of actually getting that funding back. So the write-off piece was like step 2 of that 4-part process.
And that will be once we receive that amount, then that will be reflected on this 4.2, or is it reflected in a different manner on the report?
I believe that will be reflected in the 4.2, and that's what we have that financial plan document that was just the 1-pager. That for a while, I think it provided value in terms of where we were at through the closure process. When Heather and I talked, and then also with Jim, I don't know the last couple times that it's really been of value really to anybody, right? Being honest. So what we want to do now that we're kind of shifting our approach to taking it bucket by bucket, we want to convert that into more of a dashboard for each of those buckets. So then as we get some of that Medicare recovery back, then you'll be able to see that within that dashboard of that Medicare particular bucket. Or as we get transitions hospice, we can reflect that on that dashboard with transitions hospice, or the hospice bucket. So I think it's going to be a better kind of 1-page snapshot of the overall report that Heather gives you, to kind of show where some of the actions that you have taken, how they're being applied to those portions.
Okay, so I think, Heather, you made a comment, their goal is to have this completed by the end of the calendar year?
That's our goal.
Okay.
It may be a lofty goal, but that's our goal because they've been out there for quite some time.
Yeah.
So we're digging it now. It's myself and June, who's dedicated 2 days a week to this, and Shauna and her support. So at least that's what we have at this moment. Plus, RSM, we rely on them for the Medicare reporting.
I'm going to have Rob, but just one thing I want to comment on, Steve. The money that comes in for this Medicare is going to come in 2 ways. It's going to be 66% we're going to get back. The other part's just going to be reduced in that 4.2 because it's going to be lost.
Yeah, as a write-off,
Right.
official write-off.
That's correct.
Yeah,
But
good
it's
clarification.
both included in it. Okay, Rob? Yes.
My question was, so once this money is collected, where does it go? Like, where does it go in our budget? Does it go to because the only thing we have left is bond debt at this point, correct?
Well, it would be applied to the Headington Fund, and so it's negative fund
It's
right
a negative
now.
fund right now because accounts payable hasn't paid, so it's a negative fund, so it'll just be lowering that negative.
But we still have cash, so where does it go? I mean, it's not negative because
It's a balance sheet transaction.
Yeah.
It's on the balance sheet.
Yeah. So it's on the balance sheet. Right now, it's booked as a receivable of something that's supposed to be coming in, and this will then be booked against that receivable to kind of cancel out a portion of that receivable.
It just transfers on the balance sheet from a planned receivable to an actual received.
Yeah.
So
Yeah,
essentially,
within
if decreases at the end, the negative balance is lower.
Right, but we're still receiving money, right?
It's
So-
less that the general fund will have to cover at some point in
But-
time
Okay.
to pay on the,
Okay,
yes.
gotcha. Sorry.
I know, it's.
Yeah, the
But I'm
overall
like, we're
fund
still
is
getting money.
negative.
We're still
I mean,
getting
it
money,
doesn't
it's
vanish.
just-
When it's all
Yeah,
said and
right,
done,
right.
we will still owe
It'll
more than
it'll
we
go to the
receive.
general fund.
And then yes.
Okay.
So I apologize since I haven't taken accounting since I was in undergrad. How do we have a negative 487,000 for accounts receivable for Medicaid Meridian?
Right, so there, from what I understand, there's an account with Meridian that there is a disagreement as to that our records show they overpaid by that amount, and their records show they have not overpaid, and so that's one that we're trying to reconcile and get them to say, no, we did not overpay, and then we can
Just
not
write
have
it
that
off.
credit. Yeah.
Okay. Or right, well, I don't want to use that term.
Right.
Eliminate it.
Eliminate.
Right,
Yeah.
right.
Okay.
Any other
I
questions?
was an accounting minor, so I'm surprised they're not going to give us one.
Yeah.
Okay, thank you, Heather. Look forward to the next report.
Yes.
Okay. Legislative update, Scott?
Thanks, Mr. Chairman. Very busy end of the legislative session. There's 2 reports in the packet that total roughly 34 pages. One is from Anderson Legislative Consulting, which is our contracted lobbyist. The other one is from the Illinois State Association of Counties, which is one of 3 county organizations in the state that we're members of, but it also is the one that has roughly 75–80% of the state's population based on the other counties that are members. A lot of information in there. Feel free to peruse it at everyone's convenience, and I'll be happy to answer any questions.
Any questions on legislative? Seeing none, we will move on to joint resolution with the County Operations Committee. This is a budget amendment related to the pandemic premium pay. Could I have a motion to put it on the floor? Rob? Sharon, thank you. Okay, discussion. I know Rob had it at his meeting. Anyone else have
Go
questions
first.
on it, comments?
So, Mr. Chairman,
Go ahead, wait a minute. We'll let Scott give a little report and then we'll take questions.
so thanks, Mr. Chairman. As you just alluded, this came out of County Operations Committee yesterday. I think the vote was unanimous at 6-0. It's a joint resolution based on the value of the cost and fitting it into your rules. What we did, staff had numerous conversations with the chair and vice chair from county operations over the last several months as to how we might shape some pandemic-related premium pay for all of our team members, whether it be unionized or not. What we came back with, based on those discussions, was a recommendation to have essentially 3 categories once eligibility was determined. Eligibility was determined to be those team members that came onto the payroll between March 15th of 2020 and March 23rd of 2021. March 15th, 2020 is obviously the day that the governor's lockdown went into effect. March 23rd, 2021 is the day that the vaccine became widely available to everyone. If you meet those eligibility criteria and are still on the payroll today, then you would be eligible to receive a one-time lump sum bonus. For those team members that are critically essential, which would include our patrol deputies, our lieutenants, correctional officers, deputy coroners, juvenile detention employees, and our facilities employees, you would be receiving a one-time bonus of $1,250. The other 2 remaining categories were based on the number of hours that were coded building closed during that same March to March time period. We used building closed as a pay code entry in our time roll system for any anytime a situation arises where a building might be closed. An example prior to the pandemic would have been when the courthouse was closed for a weather-related event. So employees that had less than 80 hours of that pay code during the time period will be receiving $1,000 as their pandemic premium pay. If you had more than 80 hours of building closed, then it's $500. Additionally, the HR team has successfully negotiated side letter memorandums of understanding with all collective bargaining agreements, subject to the appropriation, which is the resolution before you today. And there's no retroactive pay. So if you are no longer on our payroll, you would not be eligible for this. The maximum that we might spend for this initiative for our team members is a not to exceed $442,000. From a mechanical standpoint, how this would work is the committee suggested, and we wrote it up with the recommendation that came out of county office yesterday, with the source being the American Rescue Plan Act fund. This would come out of the reserves of the ARPA fund. So these are you are not taking away from dollars you appropriated for ARPA in the current year budget, but it's obviously dollars that that are in the reserves of the ARPA fund balance. The resolution appropriates those dollars, moves them to the general fund, where we will make all the payments, regardless of what fund you're paid from a line called compensation adjustments, which is in the general county budget. That covers a pretty high level but detailed summary, Mr. Chairman. I would ask Sean if there's anything I left out from a collective bargaining standpoint before I turn it over to Mr. Renaud to maybe give his thoughts as the operations committee chair.
I don't have anything else to add that you didn't already cover.
Okay.
Rob, you have something else?
Sure. Well, first of all, I think administration did a good job of coming up with something that had some logic to it as far as who should get what and when. It made sense. I mean, we definitely wanted to make sure that our employees who had absolutely no choice but to go to work and put themselves into a risk that isn't necessarily associated with the job that they took on for should definitely see the higher benefit to that. I know there's some people disabled, some people were working from home, which is true, but when they came back to work, there was a risk associated with their job, and the amounts kind of reflect the risk levels that their jobs held. One example that Shauna used that I thought was a good example was some of our dental workers at the health department. They didn't get to go to work, and they can't work from home, but when they did go to work, they were working inside of people's mouths. So, with the transmission of the disease, they were definitely putting themselves at risk. So I think it's very fair what came out, and it just shows that we value our employees, we value the risk that they took, and we actually lost 2 employees to COVID. We lost an employee at the health department, at the highway department, and we lost an employee out at the correctional center. So it just shows that there was a risk associated with the jobs that they were doing.
Any other questions from board member Jimmy?
Yes, Mr. Chairman.
Okay, Phil, go ahead.
I don't know whether you're going to be able to understand me over this antique phone that I got.
No, we hear you fine. Phil.
Okay, but unfortunately, I wasn't able to get to the county operations meeting yesterday. I wish I had. I did ask a question to the chairman as well as some of our legal counsel, and my question was, everybody was in on this pandemic situation. I think everybody, bit the bullet a little bit and did some sacrifices and so forth. And I asked a question about elected officials, and they said, well, they're not eligible. Now, maybe I'm just misunderstanding this or not. Are we talking about the sheriff not being eligible, the state's attorney not being eligible, coroner, because these three particular officers were heavily involved in this pandemic. Now, I understand they say they're workers, like they list here, deputy coroners, and they list, of course, the sheriff's deputies and his lieutenants and so forth, correctional officers and things such as that. But the actual individual themselves, they're saying, well, we can't raise your salary. Now, in fact, I think all of the elected officials deserve a bonus, just like these others, because they were the leaders of their particular agencies, and they performed well during the pandemic. And if there's anybody that's a threat of leaving us, I would say it's a lady who's not an elected official, and that would be Monica, because Monica, I'm sure did some hospital's going to pick her off and put her up there, in one of those high bracketed salaries and so forth. But can we get a decision from maybe the state attorney's office or somebody, or maybe you can correct me? Is a bonus? I should say, is the sheriff as well as the state's attorney and the coroner, are they eligible for?
Phil, I think we understand the question. I'll have Jennifer respond, please.
Yeah, so this did come up yesterday, and while we have looked into this issue in, I'll say, normal times, we haven't specifically researched it for ARPA funds, bonuses, that sort of thing. So I've talked to Jody about it. We're going to take a look and do that research specifically for this bonus in this situation, because it is unique. So we've been tasked with that, and we'll get back to all of you on that. And thank you for bringing that up, because certainly that is true about the electeds and contract folks.
Thanks, Phil. Jimmy.
Actually, people should realize that a bonus is what it says, a bonus. It's not a raise in salary. Yes.
Yeah, we understand.
Get some money, but it's not tacked onto their salary.
That's a repeat. We understand that.
That's right. When we go to raise their salaries the next time,
you go back to the base.
Include the bonus as part of that.
Yes. Okay, Jimmy.
Yeah, I got a couple questions, Mr. Fennell. Which, first off, I just want to thank Rob and
Speak up so they can hear on the phone.
Thank Rob and Linda for their work on this. I'm not sure I'm 100% there to get there to vote for this yet. So, but Scott, can you define critical, essential? I know we have these certain ones here listed, but I don't see like the highway department or some other positions in there that would be, I mean, like we just mentioned, Rob just mentioned a highway department worker died from COVID, and they're not listed as critically essential. So
when we
go ahead.
Okay, when we looked at this, we looked at 24/7 operations. So we looked at law enforcement. So in the critical essential bucket, you have deputies, lieutenants, and corrections, those three bargaining units. Then we have deputy coroners and facilities, because they were responding to like bloodborne pathogens, things like that, right, within the facilities. Highway, we negotiated that MOU. They are in the second category, two-tier category that has the 500 and 1,000. I believe they will all get the 1,000 because they were working full time and coded less than the 80 hours. So they will get the $1,000 bonus. And we did that mainly because of the nature of the work. It was mainly outdoors. It was not dealing with inmates. That type of thing was how we looked at it to determine that. So it's they're.
But you still have interaction with the public on times in some of their jobs. That's why I would be curious. I mean, you're not sitting in a truck all by yourself all day long. You still interact with people, and we would have been expecting them to do that. So that's one of the things that I would say, I think our building inspectors potentially did some via remote, but they were also some things they had to go look at, and that was interaction with public. So I know we might have some that are deemed contractually critically essential, but I don't want to discount if we're going down this road. And I told Rob my concern of day one from all this is I'm a construction worker by trade. Nobody gave you a pat on the back or a bonus for going to work and doing your job. Unless somebody didn't get paid, I believe these were part of the jobs and people were still getting paid. Which leads me to the next point, and I know we've talked about this, is I know Sharon's brought it up, I think Andrew's brought it up. This is the second time since we've had, and I know nothing we voted for on the original process of ARPA dollars was set in stone, but we just did an outline. But this is the second time we've dipped into ARPA dollars for this, so I don't know if it would be critical that we actually have, whether it be a committee of the chairs or a committee of whoever, like a committee that actually looks at the ARPA funding. Because again, now Scott, I guess I would ask, we talk about it coming out of future ARPA funding, but we already made all these pots of money where we thought we were going from. Now where's this coming from? Or what pot are we going to try to take this out, or is it going to be a hit across all the pots?
It'd be my recommendation that this most likely would come out of just the general capital improvements that we would be making to our other facilities. Small business development would remain unchanged. Broadband commitments would remain unchanged. Social determinants of health would remain unchanged, and the HHS campus would remain unchanged. The fifth bucket that we had outlined was other capital improvements, and that's where I would suggest it come from a category standpoint.
See, and that's one of the things, since we already made the vote on the outline, I think it would be essential that the board looks at that again and makes decisions on the total ARPA dollars, whether it be a separate committee. And I know I've expressed my concerns to Rob on that, and I really appreciate all the work that his committee's done on this, but what happens next if another committee says, well, I want to spend money on ARPA dollars, and we just keep doing this death by 1,000 cuts, and now all of a sudden we don't have any money in these accounts because there's no one committee, which I guess it would maybe even fall, even if it fell under finance, but one central committee that would have to approve ARPA things before they go to other separate committees saying I want to spend that money. So it's just a concern for me, and I know that's why I was a no vote. I think I was a no vote, but I expressed, I think it might have been, but either way, when we used for the insurance and it was general fund or ARPA, I preferred the general fund route over ARPA. Similar deal on this, I'm concerned about the ARPA money being spent. So I might be a no vote on this today, but that's no reflection of what Rob or Linda and their team had done on this. I just have some questions that I need to get through to get there.
Thank you, Jim. One thing before we have more discussion, what was the total dollar? I don't see it right in front of me that we were appropriating for this resolution.
Not to exceed 442,000.
Could I get a little clarity on that, Scott? Does that include comp and taxes, or is that just straight wages?
So that would be pre-tax. So that would be the dollar amount that would go through payroll, and then taxes and all that would be deducted. So the
On
amount
top of it, so
the amount they receive would be
benefits,
less than that.
We would have
dollar
to pay.
cost of benefits goes on top of the 440 or whatever, right? So it's a bigger number. I just want
Yeah.
exposure to what we're doing.
Yes.
Do we know what that number is?
I would. So how do I explain this? The 440 would be to cover the bonus amount, and then anything additional related to FICA and IMRF would go through that fund. I don't have that with me because I'd have to break out who was in SLEP versus regular IMRF. We can get that though.
So it's another 7 to 10%.
Roughly, yeah.
So on a bonus, we would have to pay retirement?
I don't know if there's a difference. I have to check on that. I know there's FICA. I'll have to check on the IMRF piece. I don't know that off the top of my head today. I apologize. But it's wages. It'd be wages.
Yeah.
It'd be wages, so yes.
And unemployment bonus is a wage. all your
have to
payroll
pay
tax.
benefits.
Yeah, you do, on any benefit like that, yeah.
Like our funds. Like,
Then payroll taxes, back in Social Security, but IMRF. IMRF is a retirement account, not federally mandated or state income tax. You would have to pay those, but you shouldn't have to pay retirement.
It's a gross wage.
Right.
So it's a gross wage from a payroll standpoint. So those deductions will be applied. It's a bonus. There might be deductions at a higher rate for some of those withholdings.
Right.
Yes, Ms. Blair.
My original question was similar to Jimmy's. What bucket is this money coming out of in terms of ARPA? To continue with that, though, is I would like to see something about our ARPA funds and what we already think we're going to be spending some of that money on and what we haven't yet decided. I know that things haven't been appropriated yet, but how much money is there to play with? How much have we already considered, oh, that's going to go to building the health department, that's going to go to what? And that would be something I just would like to see, because I'm having a hard time visualizing where these buckets are and how the money is being spent. I just don't want it to be like bar mitzvah money, right, where you're like, oh, I'll take it from my bar mitzvah money, right, and then suddenly you don't have anything left. Much like what Jimmy said. Yeah. Well, and did you use the money on beer and stuff instead of what it? Well, I mean, I meant later on. I don't know. Did it not last until you were of age? I don't know.
Are there any
Always my friends who had bar mitzvahs, we always we're like, oh.
Rob, do you have a question?
I just wanted to bring up. I just want to make sure that I could say it. We did have one
Speak
union.
up so they hear on.
Sure, we had one union that had provided a demand to bargain over ARPA funds, because ARPA funds, one of the purposes from the federal administration was that it could be used for this purpose. So we did have one union that did request a demand to bargain for these funds. Of the 9 unions, I'm sure once that was done, that the other unions are also probably going to demand a bargain. And the side letters that we have sent to the unions, 8 of the 9 have agreed to sign them with language that says that they won't ask for additional ARPA funds for employees.
Yes, Mr. Rath.
It's interesting the conversation has shifted from should we to how we. And I think it's really important when we're talking about these ARPA dollars to remember our CFO just sat down, Director of Accounting, that's your title, just sat down and told us of the plethora of general fund money that's coming in from sales tax sources. And we clearly have the ability to separate out an additional 27th paycheck from the ARPA discussion if we have the courage to. I'm the usual, one standing guarding the general fund dollars, but there's so much of that here. And to Mr. Dillon's point, we've already had a conversation about how we would program the ARPA dollars for this coming season, and who's going to get short of which bucket does it come out of, what capital project doesn't go forward because we're using the ARPA money. So I just would remind you guys and gals that we do have an interesting season of general fund that's come at us that I think it takes a 2/3 vote to amend our budget. So that's just my only comment, and I applaud, of course, your initiative.
Yeah. Rob?
And I understand that. I feel ARPA, we're constricted as to what we can spend that money on. Where general fund, we can spend it, we can use it where we see fit. And I think that this will quench the thirst of the unions who are seeking ARPA dollars Whereas I feel that if we use general fund, that there still could be a thirst out there. So I feel that the best funding source for this is the ARPA dollars. And like I said, we can't use $400,000 of ARPA funds to pay down Headington Oaks bond debt, but we could use $400,000 of general fund to put towards those. That's my only thought.
Good point. Because one of the sources, one of the items that ARPA fund can be used for is for this purpose. It's called out exactly that. So,
I believe Linda.
Linda, you have a question?
I just wanted to make a comment.
Yes.
Unfortunately, I could not hear very much of what Chairman Rand said, but I personally do not want to take this money out of the general fund for exactly the reason that Mr. Renaud stated, which is we cannot do anything about the Headington Oaks bond from ARPA money, and we can from the general fund. And so I would not want to take this out of the general fund.
Thank you, Linda. Any further discussion? Yes, Jennifer.
I just, having made notes on some of the things everyone has said, I agree with Phil. We need to look at what we can do in terms of the electeds, given that they were physically present much of the time as well, sometimes more. ARPA funds certainly make more sense to me given the limited use, it's not that limited, but giving the specific named uses of those. And I also just want to mention in the future, luckily I'd been involved in some of these conversations thanks to Rob and Linda, but I was disappointed to see the email that went out ahead of time to the employees before we had this discussion as a committee, and I know there's reasons for that, but moving forward, I think we need to have these discussions before we, notify the whole organization that this has the potential to be happening. But I do support all the work you've done and definitely think that those who were on the front lines need to be acknowledged. So.
I think as far as elected officials, I think that's still being discussed, and just because we pass this doesn't mean that we won't come back with that as a separate item to do similar to what we're doing today. So just because we pass this doesn't mean that won't be done in the future. Mr. Dillon.
I just want to so I will be voting no today, and that's partly based off of what Chairman Rand says. I can't vote on something when I don't know what the total is. So 442,000 is not our true cost in. I don't want to approve something. So that, for me to be a yes vote in 2 weeks, that number has to be way more solid.
Thank you. Any further questions, comments?
Solid.
Yes, Rob.
I just want, I know we have one elected in here. I just want to commit to you that if we are able to, that I'll put something through operations for that little bonus.
Okay. That and a quarter will get you a cup of coffee, so we'll.
Yeah.
Well, a quarter maybe not.
I was gonna say, a quarter
Again, where are you
nowadays?
buying coffee?
Yeah.
Okay, yes.
I just want to add what Jimmy said. I really think we do need to have a few folks that are kind of overseeing the ARPA dollars and what is going on there.
I think that's very excellent.
If it's going to come out of this committee, or if it's a group of 4 or whatever county board members, I really think we need to have that conversation and have someone who's overseeing the dollars.
I think that's very good input. I think we should too.
I agree with that. Probably should be this committee, but
Yeah.
someone needs to make that decision.
Okay. Any further discussion? We have a motion on the floor. All those in favor signify by saying aye.
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 Opposed?
Aye.
Aye. Aye.
Okay.
Aye.
Okay, Phil. Who else? Rachel?
Yeah,
Yep.
Linda and Paul.
Linda and Paul. So all 4 of you on said no, and then Jimmy also.
No, they said
No, they said
no,
aye.
They were ayes.
Oh, you were ayes
Ayes,
for.
yes. Yeah.
Okay. And those opposed? Jimmy's the single no vote. Linda, were you opposed?
No, I said aye.
That's what I thought. Okay.
There was just a delay.
The delay, yeah, okay.
You have to get off mute, right?
All right, so the only opposing was Jimmy, if that's correct. Okay. Miscellaneous. Any miscellaneous? No miscellaneous. We're adjourned for Mr. Rand. Thank you much.
5-minute restroom break and we'll get started.
Sure. Absolutely. Never pass one of those up.